All right, so good morning. Give me just a second here. Now everybody left. All right, so I'm just going to go ahead and start this off here. All right, today we're going to start talking about trading the channels. All right, we treat the channels exactly like we'll treat the ranges. There's really no difference in trading them. Let me bring all these over so we can open up. I don't know why they're going so slow. But anyhow, let's bring that down there. Alright, so I marked off this channel earlier this morning. Alright, we broke it. And now are we doing that 1-2 retest? Right, that's what we're looking for. But we do have that gap to fill below us now. We have this major gap from the overnight action. But I want to talk about... we're going to join the ass there. And I'm actually going to put in another order for that rogue candle. So if we get this rogue candle that just shoots up for some reason, we'll go ahead and get filled up there. And I'll even put another one here. And I'm just going to leave them so you guys could actually see taking trades on the MNQ. This here was on the NQ. This is all on the MNQ, which we're going to be trading as a group. So right now, I guess we did get filled for 2. And I'll be looking to sell one right here. And then the next one I'm going to let run. Because we're going to be looking for that, you know, that 1-2 reversal back to the downside. And we might not get it, and I'll show you why. Give me a second. Alright, so if we open this up... Actually, let's look at it on the 15-minute time frame. It'll be easier to explain it. And I just want to leave that where it is. Alright, so here's the 15-minute time frame. Okay, now, looking at this major move that we had on Friday, okay? Whenever you see a major move like this... Whenever you have a major move like that, what you want to pay attention to is what happens to that when it's in its range. Okay, I know I have a lot of stuff on here. Looks confusing. Alright, so once you have that major move, you want to mark off the top and the bottom. Alright, and this is where some people will use Fibonacci levels and stuff. But our trend lines, we draw them so good, they act just like Fibonacci, so you could do whatever you want. I would recommend sticking with the trend lines that I'm teaching you because it's going to help you take your profits and where you're going to take your profits at and close out your trades and get into them. So what you're looking for here, when you have a big move up like this in one day, you're looking for how far does it pull back, okay? Where does that pullback stop? And it stopped right here. Now, if you were to measure that move, okay, if you were to take the overall range of that move and measure it, you know what? I don't want to confuse you. Let me just go up to another chart that doesn't have anything on it. So it's nice and clean. 15-minute time frame. Alright, much better. Okay, so when you have this big move, alright, boom, when you have a day like that, you're looking for how far does this pull back, okay? Because that's going to help you determine the odds of whether this is going to continue to the upside or if it's just going to fail. Okay? Now, this pulled back a little bit higher than the 50% mark of this move. All right? So, what I'm trying to say is that if you were out walking in the woods and you climbed up a mountain, right? A really big mountain, okay? Obviously, you're going to be tired and you're going to want to rest, right? So, since you came and you just kind of walked down, but you didn't come all the way back to the bottom of that mountain, the odds now are in your favor to climb another mountain. Okay? Does that make sense? Because if this move failed and came all the way back down to here, which we still have that gap to fill below us, it would be much higher. The odds of it coming back up to this area would be much lower in the given span of time that we currently have. Okay? So what I mean by that is, let's go back even further. Okay? Look at this move that we made. Another day where we made a massive move. We stayed above that 50% mark, and the market was able to climb even higher. Why? Because it didn't have to walk up this whole mountain again to make its next leg up. Okay? So the odds are in your favor to see a more movement to the upside when after the big move failed to come back below the halfway mark. That makes sense. I hope it does. So here we're seeing the identical to what we saw here, right? The chart almost looks identical to the T. If you took a picture of this and what we're experiencing right now. Look at that. Look at the movement. Look at the price action. Is that not almost identical? Boom. Boom. That's like scary, almost identical, right? Look at this area and look at this area. Look at the patterns. Look at the patterns. Almost identical, and look what happened. Okay? This is why I tell you it's so important to pay attention to price action, because the markets do the same thing over and over and over again. Okay? The markets do the same thing over and over and over again. Okay? They repeat themselves. The patterns repeat themselves over and over and over again. All right? The problem that we're running into here now is, one, we have this big gap to fill below us from yesterday's close. We still have this gap to fill from last week. And the problem the bulls are going to run into is, not only do we have these two areas of resistance, but we have an even bigger one right here. All right, so if they break through that, there's so much resistance up ahead of us, up above us. It's going to be really hard to trust a breakout, okay? It's going to be really hard to trust a breakout. So we're not looking to play that upside just yet. Now, tomorrow, after the economic data that comes out, it's game on, okay? We're riding that horse all the way back to wherever we're going to go up above us, okay? But we have to wait and see how that plays out. All right, but right now the odds are not in our favor, all right, for the short side. Even though that's what I'm anticipating, right? We have gaps to fill below us, and I don't see them wanting to add to their positions up here, smart money, if that news tomorrow is actually going to send us catapulting to the upside. All right, so they're going to want to bring it back down, even if we don't fill this gap today or tomorrow. At some point in the future we will, okay? If we don't fill this gap today or tomorrow, I'm pretty sure we're going to fill this one today, no problem. All right? But if we don't fill this one, don't worry about it, because sometimes, it's not very often, okay? But sometimes we can go a month, 2 months without coming back to fill this, and that lines up perfectly, 2 months, with what I said, how they like to do these Christmas rallies every year. All right? And then come January, just unload the entire market. So this 2-month time period, looking at this gap to fill, could actually play out. Right? And then after, come January 1st, we just start selling off. All right? Again, earnings are being super bad. Uber just reported terrible earnings. Is the market responding to Uber's bad earnings? Nope. Right? Like I said, the market has a mind of its own. It doesn't want to follow what reality is going on under certain circumstances. Okay, we've had terrible earnings so far, and the market's just shooting up, right? Like I said, bad earnings under these circumstances, okay, could be good for the market, right? Because of the interest rate coming up. Not every time is it going to work out like that, right? Typically, if there's no upcoming news, we're not in the economic stress that we're in, you know, bad earnings would be bad for the market, right? But in this situation, in these circumstances, like I said, bad earnings could be good news for the market. All right? So we're going to have major trouble today. Okay? I don't see them being able to shoot through all this today. But tomorrow, I see this going through the moon like we saw on Monday. Not even respecting anything to the left, just skyrocketing. If, in fact, they do ease up on those interest rates. Now, if they don't, all right, then we're going to sell off, and maybe that's what they're looking for. They're not looking to add here. They're looking to sell, right? So it's kind of like a double-edged sword right now. It's probably better, you know, just not to trade if you don't know how to trade today or tomorrow, okay? Because today is going to be a very tricky day, right? I mean, there's so much stuff to the left of us, key areas, even up above us, where these bulls are going to really have to battle it out if they're going to break these levels, right? These are levels, they're not like these levels where we just broke through them. These levels actually have some weight to them, where you're not going to get that clear ride up, okay? So, you know, you just have to have in the back of your mind, what are they wanting to do, right? Is big money, you know, this wasn't caused by retail traders. So this was smart money that made this move. Okay, so if they're looking to unload and dump it tomorrow, then sure, we could easily break through these today, right? And then this gap will be filled tomorrow, right? And this one could be filled tomorrow, all right? If they're going to dump it, if the Fed does not ease the restrictions, all right? But for the most part, it should already be priced in. Okay, but with the bad earnings, you know, there's a lot to digest. So we just want to make sure we're prepared for that. Again, we want to make sure that we're staying on top of the game. All right, we're being smarter than what they're, you know, anticipating to do, right? We want to ride the coattails of smart money. So we just have to be patient and play along with them, not against them. All right, so today, you guys already have the whole range by now under control. If you don't, day 6, you'll master it. Okay, master day 6, and then you're going to master day 6, 7, and 8. Okay, and then every other day of that boot camp is going to be gravy train, because it's going to incorporate everything you learn from day 6, day 7, and day 8. All right, so with like day 6, 7, and 8 are really the foundational framework for your overall trading career. Okay, why? Because the market, what I'm teaching you now is going to be how to trade the channels. Okay, all the market does is range and channel, range and channel, range and channel, range and channel. I can't stress it enough. It ranges more than it channels. Okay, and this is why trading in times like these, that where most traders can't trade, traders like me thrive, because there's so much money to be made in these conditions, right? When you know how to trade like this, when the times are tough and the market's just kind of ripping down, ripping up, the volatility is there, you can't ask for anything better. You know, most people, so many people have left the game since December because they blew up their accounts. They don't understand how the markets work. They never did. They were gambling. They got lucky. Anybody that was hanging on by a thread is pretty much gone now, right? But this is why learning to trade in these circumstances, guys, is so imperative and will help you in the future, right? Because when the market does ease itself out, you're already going to have everything you need. And when it does come back like this, you're going to like it even more, you know? I mean, your profit potentials out of the zones are smaller, right now, but you're able to make so much money because the zones keep repeating themselves over and over and over again, right? It's zone after zone, range after range, right? Because typically when the market's good, you'll see 4 or 5 days straight up in a row, right? 4 or 5 days straight down in a row. You don't get the, 1 day down, 1 day up, 1 day down. You don't get the seesawness that comes with that, So you can make massive amounts of money just like we're doing, right? In these markets. And I'm not monitoring that trade, but again, I do have orders waiting to short it back down. So yeah, so right now what we're going to focus on, and let's open this up. We're on a 15-minute. Let's go to a 5-minute just so you can see it a little bit better while we're talking, okay? So now what we're going to focus on is, I don't want you anymore, I don't want to say don't want you to, but now your focus should be on your free time mastering day 6. Master the range setup. And now day 7 is going to be identical, okay? Except now we're going to be trading the channels, all right? So here would be your channel. All right? Let me clear this up. Okay, if we marked off a channel here and we wanted to trade this channel, it's going to be the same thing, all right? You're going to have your no trade zone in the middle of that channel, exactly like a range, okay? And you're only going to be looking to sell the highs and buy the lows. And how are you going to confirm a channel breakout? All right? If it's going to break out to the downside, you're looking for the same thing. That consolidation in the lower half of that channel. Okay? For the breakout down, just like this channel. Okay? This channel right here. Right? Let's open that up and look at it. It's amazing how easy every day is going to be in that boot camp for you guys. And you're going to understand just how easy it is to trade the market. You're going to be like, how did I never understand this before? Right? That's what I'm saying. I'm trying to take years off of your guys learning the process, okay? So here's your channel. All right, we started this actually started with a big move from the top, okay? But when you're looking at the overall channel for the break, all right, again, you'll have your areas marked off, all right? You'll be looking left, okay? Don't ever forget to look left, okay? There's no difference in that, in the aspect of trading a channel, except now with the breakouts, you're looking to break out a candle to break below this previous congestion zone, okay? You're looking for the candles to break below. Notice no candle here broke or closed below any of these areas that I just marked off until we got to this one, right? So not only did this break outside of your channel, it broke below and closed this part of the channel. Now I know that's confusing and there's a lot of stuff going on there, all right? But again, this is just day one introducing you of how to trade a channel, okay? Now, trading channels are going to be trickier than trading a range, because when you're trading a channel, you have to trade the channel in the direction of the trend, okay? Yes, you can take trades on the breakouts, but you're always going to want to wait for that retest, okay? You're going to want to wait for the retest, and this is where location becomes so important in a channel. All right? I always tell you guys, real estate, location, location. All right? It's going to take a little bit longer to learn how to trade the channel. The easiest part of the channel for you to trade is when you treat it like a range until you understand it, is selling your highs and buying your lows, okay? But now we're really going to have to start incorporating our 20-period moving average and our relative strength index once we start getting into the channels. Okay, the channels require a little bit more thought and planning as opposed to trading a range. Okay, we have to go a little more into depth and understanding and reading of pure price action. Okay, our number one goal is always going to be to focus on the price action. All right, this is our second tool. This is our third tool. and our fourth tool and our fifth tool, okay? So this is really just basically getting you ready for what's coming for the channels, okay? Now, even though this channel broke, right, and you were looking for that 1-2 retest, all right, we're not in the right location, okay? We're getting in the right location now if you're looking to trade a channel to the downside, right? Because now we're coming into an area where if we look left, we have major resistance all over the place. And we got filled here for that third one. And that's why I put these up here, right? Still have my take profit down below us, and I'm not going to change that. Right now, I'm even going to put another one right down here to buy it to close out. I got 3, and I'll put 1 right up here. I'm going to be kind of aggressive on this because I'm anticipating that pullback at the open. All right, to fill that gap. We got 2 gaps below us. The market's really not going to like that. So that's why I got these buy orders, sell orders in up here. And I'm on a 5-minute, so I'm not sure where's my... Oh, I'm on this one. I need to go back to this one. All right. I use that one because of the... We're live. All right. Now, let me go to a 5-minute. Come on, screen. I'm not sure why I have such trouble with these. This loading all my areas up above us. Let me see. You guys can hear me, right? Can you guys try talking, or somebody just said we're not live? Russo, can you hear me? Okay, good. Yeah, so I'm live then, right?
I can hear you. I just have to get settled. My dog was super sick.
Yeah, I'm sorry to hear that. You taking her to the vet at all today?
No, I just got off the phone with the vet. She's going to give her more meds. She only has, she's not doing well. It's the end of life for her.
Right.
But, just kind of a little bit of surprises this morning to deal with. But I'm headed over to my station here and going to fire up my screen. So.
All right, I'll talk with you later about it. I'm talking about the channels now, and the channels are going to require, more details and trading with the trend, right? We're looking in the channels right now. If you want to practice when you're drawing your channels, all right, guys, you're going to draw them and treat it just like a range. Okay, when you go to draw this, use your multi-line tool here, and then you'll be able to draw your no trade zone for the channel. Okay, so it'll be just like trading a range, but right now, if you want to practice it, you're just looking to short the tops and buy the bottoms. All right, because you're not going to understand really what I'm talking about right away on day one. So this is kind of just an introduction into beginning to trade the channels, okay? And again, location is everything, okay? So on this particular channel, right, we're building up that pressure now. If you looked at it like a range, the pressure is starting to change up into that, upper quadrant of the channel where you would be anticipating that break higher, all right? But again, we're in that location where we're going to see that major resistance. We have several levels to the left of us where it's going to be really hard for them to break through, right? We have one like here, one here, one here. Not sure why they're not showing up here. So we have a major resistance above us, okay? Which is why I still have those orders on. And Why they're not showing it is beyond me. Because this is the NQ. That's why they're not there. Alright, so here are the orders that I have. We got 3 contracts on now. And again, I put sell orders up top here. Just one, right? Because I'm anticipating this move back down with this big gap that we have to fill from overnight. Alright, again, we have so many factors to consider for tomorrow and how we're going to play the game for today. We do have news today that could potentially move the markets coming out at 10 o'clock. Alright, so again, the you know, depending on how the Fed sways the interest rate decision, you know, we're going to see a major move tomorrow, and I think we're going to see it to the upside, all right? But again, it's just going to come back to what they say, right? Are they going to keep the tightening or what? Right? The odds are not in favor of that with all the bad earnings. So, back to the channels. All right, notice this channel from this morning, we kind of broke it, right? That's not good news, right? But now we're kind of coming back in, but we're still hovering that morning line that I drew, okay? But the fact that we broke it is showing weakness already, right? There's going to be a lot of hesitation up here, and I think what we're going to see today is we're 100% net long, right? So are the market makers going to open this thing, rip it right up to this level, and then tank it immediately just to trap in as many buyers as they can? That's the games they like to play, right? That's how they like to do this. But again, we have this gap, and we have another gap below us over here from last week, right? So we have 2 gaps below us. And like I said, with those gaps below us, right here, and now we have one right here. The market's, it's not going to like that at all. Remember, I was anticipating of hitting that before tomorrow. Now, the other thing you've got to remember is we're double topping here. Okay, so now the bulls tried once. Now they're trying twice. All right? So we have the potential. Where are our 2 points over here? All right? This is going to be our highest high right here for this line. So I'm going to mark that off. I'm going to make it really yellow. Okay, it's kind of like a caution. Now where was that at? That was at 11,630. 11,630. All right, now this one's showing above us. Now these are showing above us. Okay, now look right here. That line we just marked was 11,630, right in this area, right? So the next one I'm going to mark off is this, 11,652. And again, these are just small lines, small potential areas that we want to see on the right. Okay, price targets, profit targets, right? Okay, so now we got those. Okay, so we have one, two, 3 layers of major resistance above us. So today's not the day that we're going to crack through all 3 of these, right? We might come up here, possibly halfway mark here, right? But they're going to want to fill the gap below us, okay? I'm not even questioning that now. Whoever's here now, you guys were not here earlier when I was kind of explaining how the mountains work, if you will. All right, so let me just run over that again with you guys real quick. Okay, because this is an important role, and it plays a key role in how you actually look at the markets, okay? So when you look at, this is from a few weeks ago, 1021. We made this major move up this mountain, right, in one day. Now, if you take this mountain and if you just climb this, we'll call it Mount Everest, right? And let's say you climbed it and you came back down. Are you immediately going to want to climb it again? Absolutely not, because you know you can't do it. Most people have trouble doing it once, right? So if the market doesn't come down all the way and it kind of finds its resting place halfway down, well, then it's resting, right? And it has the potential to move higher. It has the potential to make another move higher. As opposed to if it came all the way back down, the odds of it making a new high are going to take some time, right? It's not going to happen after a big move. Now, let me show you what I mean, okay? If you look at this area, come on, why is it not scrunching down now? Let me go to the higher time frame so we can scrunch it down like I did earlier, okay? If you guys look at, this is why I always say the market repeats itself over and over and over again. Do these two areas not look identical? Big mountain climb, short pullback, right? Big mountain climb, short pullback. I mean, the pullbacks themselves look almost identical, do they not? Right? This is why it's so important. I need you guys to pay attention to price action. All right? The patterns repeat themselves over and over and over again. This is how I actually began to find patterns. I'm telling you, after like, I don't know, 2 years, right? Like I said, I literally stared at these charts for 8-10 hours a day, even when the equities market was closed, right? Because that was back, all I traded in the beginning was the equity market. This I just started like a year ago, a year and a half, when I was looking for you guys, but that's what I would do. All right? I'm like, you know, there's got to be something I'm missing, right? And that was it. The market's predictable, right? It makes the same patterns over and over and over again. The same patterns over and over again, right? So learning to identify these things and how the market moves, all right, it took me almost like 4 or 5 years to finally putting everything together and learning to understand it, and then starting to build my own strategies, right? So, you know, you guys are getting all this packaged up in a fraction of the time, okay, from what it took me to actually losing everything I owned, right, until I finally started making money and made it in this game. You know, but really that's what separates people who are going to make it from people who are not, right? When I start something, I'm built different, right? When I start something, I don't quit. I will never ever quit until I figure it out. That's just the way I am. I've been like that since I was a kid. My son is like that. I love watching him with toys or puzzles or whatever he does. And like I said, he's got this following now for his VR, and it's crazy. But he's like me, right? We want answers. We want to know the whys, right? So these are the things you got to pay attention to. But isn't it eerily similar how these look alike, right? Just like I show you guys, if you look at the futures market and then you go look at your top stocks, Amazon, Tesla, Google, Nvidia, Microsoft, Apple, for the most part, they're all going to look identical to the futures chart, right? And I always say, how is that possible, right? If there's 10 million people trading Tesla today and 1,000 people trading Apple, how can the stock charts look the same, right? Well, because it's smart money that's moving the markets. We're not doing anything, right? Our money's not moving these markets. It takes billions of dollars to move the markets, right? To have the market move in any one direction, okay? All of us retail traders, if they shut the markets down, right, the NASDAQ futures would probably move $2 in a day, right? Because that's all our money combined could move it, okay? So just a little chuckle there, but anyhow, so now here on a higher time frame, all right, we have major areas, major resistance that's going to happen below us, all right? I mean above us. So to break through this on a day like today, you know, the odds are not in the market's favor, okay? Unless big money knows something we don't, and they want to plan to get as high as they can so they can tank it after that interest rate decision tomorrow, right? Again, we have one area, now 2 areas where we're 100% net short, okay? So I would be beside myself if we did rip up without coming back to fill this today, all right? Because for the market to have 2 areas where we're out of balance, that will be something that I've never seen before, ever. Okay? So the odds today are 100% to the downside, at least till we fill the gap to yesterday's close. But like I said, you know how they like to play the game. They might try and run this up to trap everybody to the long side before they pull it back. Okay, so today's going to be one of those imperative days, your 8:30 to 9:30 time frame. Okay, but today is one of those days, if we break to the upside, I would urge you not to go long. Okay, you don't have to listen to me. Okay, I could be wrong, but I would not buy this going long today. All right, there's just too much resistance waiting ahead above us. There's too many sellers waiting to claim their profits, right? There's just too much going on above us at the moment, and too much coming in the future tomorrow. Okay, even at 10 o'clock today, we have news. All right? So as you're building your trading day game plan, you know, I haven't heard Bazinga all day. Why is this not working? I'm going to stop it now, but I got to call them and find out, because I'm paying for that, and I don't like paying for that. But anyway, we got... that's tomorrow. Is that tomorrow? No, that's tomorrow. Wednesday, Tuesday. Okay, yeah, so we have ISM and JOLTS today, and then the global manufacturing at 9:45. So 9:45, again, right? This is right after the bell, okay? Right after the bell. Right after the bell. So could the game plan be rip it up until we get close to these times, and then adios, right? Right back to the downside. All right, guys, so today's one of those days where, you know, nothing is looking good for the upside potential, in my opinion, with what we have on deck, not only at 9:45 and 10, right? We have so much going on above us and so much anticipation waiting on us tomorrow, okay? So we have two gaps to fill to the downside. All right, enough talking about that now, just to give you guys kind of, again, an overall, you know, what are we thinking as traders? How should we be thinking as traders? What should we be anticipating as traders? Where are the locations we're looking for those high probability setups? Here is one of my favorite patterns starting to develop on the 15-minute time frame. Remember, I was telling you guys, I love when we see this type of a pattern, because it's starting to develop, right? This is what it will look like typically. Is it'll close red just like that with the big tail. So you'll have a green, the Death Star, and then another red one to the downside, right? Right back to the downside. So you can already see with these topping tails that the buyers are having trouble, okay? That's your first indication. All right, I really love this 15 and 30-minute setup we put on here. Even though I have all these other monitors, when I'm with you guys, I'm focusing on the charts and I'm not looking at everything else. So I really love this, the way we set this up. And especially for those of you who don't have access to additional monitors, all right? So on the higher time frame, the 30-minute, we have a bullish engulfing that took out everything to the left of it, right? But again, I'm telling you now, I wouldn't be the first one to buy any breakouts today. All right, you guys already know what's waiting. Okay, you already know what's coming up. So to be a breakout buyer would be the most foolish thing you could possibly do today. All right, like I said, you have the whole entire rest of your lives to trade. Trade smart. Know when not to trade. Okay, know when to stay away from the markets. All right. So the next game, again, what's coming up next is trading the channels, okay? The markets really only do two things, all right? They channel or they range. They channel or they range, right? That's all the markets do. So when you guys, day 6 is already there, master the range. Because the channel is almost identical to the range, but there's a lot more moving parts that you're going to have to be aware of, especially to play a breakout. All right, but on the channels, what you already know from the range is you know how to set them up. You know that you can trade the highs and the lows. Okay, you can trade the highs and the lows of the channel. All right, but the channel, we're looking for specific breakouts of the channel under specific areas. Okay, under specific areas. All right, so we're waiting for candles to close. Like if we looked at this channel right here, okay, our go time to short would be 1, where are we in location, right? This channel came up to resistance, right? Okay, where are we in location for a breakout to the downside, right? When we're gonna short outside of a channel, okay, we need certain criteria. We need a candle to close below these little, I call them steps, okay, because it's kind of like you're taking the stairs when you're in a channel. All right, a candle would physically have to close below the steps to the left of it. Notice how on this ride up, none of these candles closed below the prior level, below the prior steps. All right, except this one. This one did, and then what happened? Okay, if we erase all that, let me get this to a color you could see. Okay, so in this channel, right, if we looked at it like a channel, we have the steps, okay? And these are all areas of liquidity, okay? On these steps, all right? These areas right here where these candles are sitting on, that's the area I'm trying to draw your attention to. Let me get this bigger so you can see it, okay? These areas right here where these candles are all resting, okay? These are what I call steps. Okay, these areas where all the candles are resting. So if you're going to trade a breakout of a channel, you're going to want a candle to close below your step level. Okay, and with channels, just like with ranges, it's going to like to make the same repeatable pattern. Okay, you guys can never forget this pattern. Okay, the break and the retest. Okay, the break and the retest. Okay, on the retest is always an excellent area for a bigger size position if we're in the right real estate area. Okay, that first retest. All right, so this is kind of just like a prequel of the channel. Okay, again, the channel is going to require more knowledge on trading the right location, okay, for the breakout to the opposite direction. Because most of the time what a channel will do is, if we're in an uptrend, it will channel, and then it will range. Okay? So you could trade that channel, and then you could trade the range, right? You're still going to have your no trade zone within the channel, just like a range. All right? So just wanted to give you an idea of what's up next. All right? This is a time when we're going to be focusing only on the channels. All right, the 30-day boot camp day 6 is there. Learn it, master it, because day 6, 7, and 8 are going to be the building blocks for the rest of the boot camp. Okay, and it's going to, everything else after 6, 7, and 8 is going to be second nature to you. I'm going to teach it, and you're going to say, okay, that's easy. Why? Because you have 6, 7, and 8 as your foundation. Okay, building the building is easy after the foundation is laid. Okay, the foundation is usually the most important part, and it has to be perfect. Okay, the building comes second nature, right? So the foundation requires, land clearing, all that stuff, right? Land clearing we can consider here is getting rid of bad habits. All right, we're clearing the land, we're setting up a new foundation, and we want to get you prepared to start building on it. All right, again, trading these ranges, let's look at another one. And remember, we're on a higher time frame right now. Okay, so with what I just said, here's your range. All right, you have your steps, right? You have your steps. on that range. This is a higher time frame, right? And then you got the candle that cleared your step, and then you had the what? 1, 2 pullback. Okay, on this range. All right. Nice little profit on a 15-minute chart. Okay? So, just get in the habit, okay? Identifying your ranges, which all of you, I mean your channels, which I'm sure most of you know, right? And now just start keeping your attention on the stairs of the channel, right? We're in a good area and we're in a good location of real estate. We're at the bottom of the bigger picture. So a breakout is anticipated to the upside, right? Go ahead if somebody wants to talk. I can hear you. Now, outside of being in perfect real estate areas, guys, all right, if you look at this whole area, okay, you consider this whole big area like one big range, okay? So now that you have that knowledge, when you're looking to trade a channel, okay, how would you trade that channel according to this range? All right? Well, if we're trading to the upside on the channel, we should be following the trend in that range, okay? So at the bottom of these ranges, when you're trading channels, trade them to the upside. At the top of the range, when you're trading channels, anticipate the breakout of a channel back to the downside and trade them to the downside until you get into that big chunk of your bigger picture range, and then don't trade them, right? Because your higher probability trades, even in channels, are going to be in your best real estate locations. All right, guys, it's so important that you guys grasp what I'm telling you about location, location, location. All right? If you learn to become patient and wait for the trades to come to you, right? In the beginning, guys, I'm telling you, this is what you can do in a matter of minutes, right? Once you get it all right? Because you're not going to question your process. You're not going to question where you're getting in. My trades are still on here, still running with my profit targets in specific areas, right? And this one I'm letting running. We have 3 contracts. 3 on the MNQ, the one we're trading. All right, but I'm not even focused on that while I'm trading with you because we're in a specific area. We're in a specific location. We have my favorite patterns developing here. Okay, we already know what the deal is. We already know we have 2 areas below us, gaps to fill. All right, when you learn to trade smart, all right, all the fear and stress of trading goes away. And that's when you start treating the market like your personal ATM. Okay, because you're not questioning yourself. All the questions came before you got in the trade. They were answered because you knew how to successfully review your trading day, map it out, know where your areas are that you're trading, right? What are you looking for? Where are the bulls going to have the most problems today, right? What are the odds of them leaving 2 gaps to fill below us? All right? So with the news that's on deck, okay, you could just take these trades and you don't have to think twice about them. And that's, again, a reason why so many traders fail. Okay, especially ones that don't know, right? They'll see these big green bars, they'll buy in, and then what happens? It comes back right on them. Okay, why would you be buying at the top of a range, right? Simple. It's baby steps. Keep it simple, right? Somebody just said that. I think it was even here. Kiss. Keep it simple, stupid, right? I don't like saying that word stupid, but you get what I'm saying, right? Let the markets work for you. You don't have to stress out in the world of trading. Yet most people can't ever get to that point in their trading career where they're just confident. It's like, packing their car, going to the beach, right? I mean, that's what our intentions are of doing for you guys, all right? We want you guys to come here with confidence, right? Leave the fear at the door, right? The market might not immediately do what you want it to do, right? But as long as you're in the right real estate location, as long as you're willing, I don't have any stops here because, like I said, I'm already anticipating the games at the opening bell. All right, I'm already anticipating that. I'm factoring that in, so I'm not putting a stop on 3 contracts, okay? Now, would I recommend you do that? No, absolutely not, because you're learning this process. Now, that's how you guys will eventually grow on your own, and you'll tweak this process, right? You'll take the foundation that I'm laying out for you, and you'll build upon it, right? You'll be able to make your own decisions after 6 months or a year of trading with us, okay? After you go through that boot camp, after you know exactly, like you're going to come in here, and I want you guys to get to this point before you even start trading, all right? Master the range, master your pre-market setup, right? Master your locations on the chart, okay? Master looking at your economic calendar, right? We started off looking at it for the day, okay? That's what I was teaching you guys to begin with, but now I want you guys to go out and look at the week, okay? And for the week, set your notifications, okay? Set your notifications. Look, I got my notifications set. Set them for the week. Look forward so you know how the market's going to react leading up to that day, okay? That's what I want you to focus on now, going out a week on your economic calendars and starting to identify channels and mark off, for yourselves, the location of that channel. All right? Remember, from the bottom, the channels trade in the direction of the trend, back to the upside. On the higher time frames, see if you see a range, a place where we're, it looks like we're in a big range, and trade your channels accordingly. All right? The channels are going to take some time for you guys to really comprehend what we're looking at. Okay, again, we're looking at the steps. Okay, here the channels are unfolding, but we have our steps, right? Well, if we're looking at let's look at the channel. I'm drawing it wrong there. No, we're not. We have our steps, okay? And we're looking for those candles to break below our steps. If we started this step off here, that one would be invalid. So let's get rid of that. All right, so to look for a downside move out of this range, all right, none of these, this one did, right? It did break that step, but it's the beginning of a channel, okay? So this is what I'm saying. It's going to take some time to explain it properly to you, all right? But you're looking, as far as the overall channel is concerned itself, okay? You're looking to stay out of the middle, all right? Stay out of the middle, just like you do in a range, okay? Do not trade in the middle, all right? Exactly like a range, which is why I started with the range. Stay out of that middle area. If price doesn't pull outside of it and you're looking to go long, do not go long, okay? Do not trade in the no trade zone, all right? Even here, I would not have took that long trade, okay? I could have, okay, because, again, the channel is going to require you to look at your 20, all right? The 20-period moving average is going to be huge trading a channel. This is where it's really going to come into play, is for the channels. In the ranges, you can't use the 20-period moving average, okay, because typically in a range, they're all sideways, okay? So understanding your 20 or 200 and the volume-weighted average price in a channel is going to be significant, okay? So for you guys, I wouldn't want you trading this, not today, but maybe by next week, yeah, you'll have a little better understanding. But don't be trying to be the hero and grabbing that if you don't know that the 20 period is there, and if you haven't been with me before and you know how to trade the 20 and the 200, okay? If you do, okay, then you could on the practice account, you could take that trade, okay? But it's best to wait for your price to come to the bottom of the channel or at the top of the channel, okay? So there's a lot of moving parts in the channel. We're going to be utilizing more with the channel, the, again, mandatory 2200 VWAP and your RSI. All right, but again, the channel, the range, and the volume-weighted average prices is what we're going to be talking about now. All right, so any questions regarding the ranges? Yeah, we're still a small group. I'm still going to be answering your guys' questions, but hopefully day 6 answered any more questions you have for it. If I left something out, if you think I could improve on it, just let me know. I already saw areas where I could improve, but any feedback would be great from you guys. I would really appreciate it. And I look forward to starting the channel with you guys, all right? So even here, right, we do have a bigger channel, okay? So you got to learn to properly identify your channels, right? You're going to have channels, but you're also going to have channels within channels as price action changes, okay? All right? But if you look at this as a big channel, like we just marked off, you can still trade it just like I'm going to teach you with your no trade zone, all right? You got your no trade zone, and you're just going to trade it for now, buying your lows, selling your highs, okay? I wouldn't try and focus anything else on that until you have the rest of the information that you're going to need, okay? But notice here, when this channel started, right, notice we were kind of still, we were kind of coming out of this range where your 20 and your 200 were flat, all right? And then we started building this small channel coming into here, because you wouldn't have gotten this picture for the bigger channel. You could have drawn your trend line from here to here, right? And I always say extend it, so you would have had a foundation for the bottom of your channel, right? And like I say, I always use my trend lines different, right? So even if we did a trend line here, right, we could have just kind of mirrored the bottom for a starting point, right? Until we actually had an area where we could have marked off a channel, right? We could have even went like this, right? So there's a lot of moving parts with the channels, all right, and how we're going to be trading them. But for now, you know, this is a 15-minute chart, so it's easier to show you guys, you know, the bigger picture, what we're getting ready to do, all right? But, you know, when you break it down and you come into the smaller charts, what can you clearly see right here, all right? If we just look at this, what did we have? All right, we came out of a range into a channel. Then we kind of came into a range, right, into a channel. Then we ranged into a channel, into a channel. Then we ranged, right, into a channel on the smaller time frame. Now, we're not going to micro do it like that, all right, but I just want you to give you the idea of that's how the market moves. It channels and it ranges. It channels and it ranges. That's all it does, right? It cannot do anything else. You know, people say it goes up and it goes down and it goes sideways. Yes, I say that too, right? That's the only 3 things it can do. But as far as price action, it can only channel or range, okay? Range, channel, right? Even on the parabolic moves that we got, okay? It's a channel, is it not? And then it ranged, it consolidated, and then it channeled, and then it ranged, and then it channeled. All right? Start looking at the market for what it is. Okay? Identify your major levels and start looking at the market for what it is. It's not some big scary monster like I used to think, right? I'm telling you, I used to think the market was so manipulated, right? I was literally like trying to figure out if I could sue them and get my money back, right? And I'm sure everybody's been at that stage, because when I tell you I lost a lot of money, I'm not kidding. And I think that's what drove me, because I'm like, there's no way I'm letting them keep my money, blah, 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 right? And then I'm like, you know, I even talked with my friends of mine and stuff like that, you know, because I have friends that are in Wall Street and we're market makers and stuff like that. And, you know, I'm like, can I sue them? And they're like, it's not manipulated. I'm like, yes, it is. I was fighting and arguing with them. And is it manipulated to an extent? Absolutely. Okay. Like I said, you know, the stop losses, you know, the market will hunt your stop losses night and day, right? So you want to put the odds in your favor, okay? And you want to be able to play the game smart. Because, you know, now I look back at my career and I laugh, you know, because it's funny now, you know, but if you knew how mad I used to get and how frustrated I was as a new trader, you know, for those first couple of years, just losing day in and day out, and I'm like, you know, every single time I get in, it goes against me, right? And I would sit there, I'm like, there's no way that can happen for real. But, you know, I was the guy waiting, right? Waiting on these candles, and then I would buy in at the top, and then it would come back. So looking back at it now, I can laugh about it, right? Because it's not manipulated. My thought process was manipulated, right? I was buying the highs in a channel. Or I was selling the lows in a channel. Or I was buying the highs of a range, right? So yeah, you know, now I can look back at it and confidently say, I just didn't know how to trade, right? Granted, you guys have, you know, all this information at your fingertips with videos and YouTube and the internet and stuff like that. Back then, with me, it was books. That's all you had, right? Or friends. You had to have people to know, right? And reading books is nothing compared to trading, right? At least now in today's day and age, you can join somebody like me and watch and learn, right? I didn't have that option, all right? So big difference between today and that. Now, the problem why most people can't make it today is because the world lacks patience now, right? We live in that I have to have it now culture. Everybody wants it now, right? And that's why traders fail. They have more information available at their fingertips, but they don't have the ability to follow through on a video, right? They don't have the ability to be patient. They want the money, they don't want the process that comes before the money, right? And that's just the sad facts of the world we live in. I couldn't, if I gave a trader a couple of my trading books, they wouldn't read them, right? But back then we didn't have social media to keep us occupied. We weren't scrolling on our phones day in and day out, right? Like now, like if you guys are out there and you really want to make this, you have to make it your life, right? You literally, until you understand it, stop scrolling Facebook, stop scrolling YouTube, watching things that are distracting you from doing what you want to do with your life. Ask any entrepreneur out there, right? Elon Musk slept in his factory, right? One, he couldn't afford anything, but all they did was work, right? Now, Elon Musk is a different breed because he still works, right? He's not like most of the other ones who get to the top and just stop, right? He's in his offices every day, on the floor with the people, and I love that, right? But most people now don't want to put in the time that's required to do anything or become successful in life. Why? Because the world is just full of distractions, and you looking at people on YouTube and Facebook that have money doing stupid things like, you know, some of the big names out there, I won't mention any, but they don't do trading, but they just do stupid videos and get millions of dollars, right? Like, they just waste their money over and over and over, and it occupies people. Okay, but guess what? You're supporting their dream by watching their content, right? It's not helping you become rich, right? It's not helping you build your future. It's helping them build theirs. So if trading is really going to be what you want to do in the future, every single minute you have until you become consistently profitable should be spent learning the process, understanding the markets, staring at these screens every second of every day that you have. Because that's what it takes. Again, I'm cutting that process down to nothing for you. But you have to watch this and you have to get it. You know what I'm saying? Even outside of here, just indulge yourself with the markets. And once you get it, then you're free, right? Then you could just come and you can trade between 8:30 and 9:30 and make $50,000 in a day and be done for the day. But to get to that point, it's going to require your full attention, right? Your willingness and your desire to get to that point, right? So anyway, good little pep talk today, guys. Do you guys have any questions? We only got 10 minutes left, and I'm got to start working on day 7 again. So if you got any questions, the channel is what we're going to be talking about for the next couple of weeks. The channel, the 20, the 200, and the RSI, okay? The average true range, we're going to be discussing this on a daily basis as well, all right? The average true range, we didn't really discuss it too much on the range, just like we did in the 20 the 200, because in a range, they're typically flat. All right. When we're channeling, you can notice that the average true range is channeling with the market. All right. But looking at the bigger picture, when the market is ranging, it's the average true range is typically flat. When it's channeling, it's going to start moving. All right. So if you look at your areas here, right, we started moving out of this range, right? And well, here it did kind of make a little bit move, but notice the value of the average true range, and you're going to need that for your taking profit as well. All right. The average true range is going to really help you determine not only looking left, but where you should potentially be taking your profits in conjunction with looking left. All right. And don't worry, pretty soon, I'm going to be teaching you guys how to take one contract in the morning hours and sell it in the afternoon, reaping all the rewards of that 300-point move. But we're not there yet. All right. And those are things that you guys can do on your own, right? You can trade however you want, whatever day you want, as long as you have the fundamentals and the knowledge and the foundation laid out, right? Some of you might say, okay, well, I know right now, right, we're in this range. Let's go back here a little bit. Where's the overnight session? All right. So some of you could have said, okay, here, right here, okay, we broke out of here. Now I just moved that. We broke out of here. We came up. We retested. I'm going to buy one contract, right? I'm going to buy one contract here and let it ride up to one of these resistance zones, right? And then as you get confident and comfortable doing that, you could say, you know what, we're where we are on the week, we have the potential, right? The odds of coming back up to this area, we still have that gap to fill, are very high. I might just let this one contract I bought here run up to here, right? Those are things that you guys will do as you put all the pieces together and you start forming the puzzle. Okay? So there's lots of good stuff coming, guys. I'm excited for you, and I hope you're learning. I hope you're mastering that range. Okay? Again, the odds we're looking for, if you guys want to practice, don't be too eager to jump into these breakouts. All right? There's really nothing there to support it. 9:45, 10 o'clock, we have the news coming out. So let that news determine what the market's going to do. I could easily see that potential for the breakout, just to rip it right back down and fill this major gap. All right, guys, so I will see you all tomorrow. I'll be around. I have all my systems running. If you ask questions, I can answer them. But if nobody's got any questions, I'm going to shut this down now and head out. Not head out, but work on the boot camp. I really want to get that done. Don't forget your 8:30 to 9:30 time frame. We got the gap to fill below us from yesterday's close. 100% net long right now. Higher probability trade is to the downside. But we could essentially see that fake out rip to the upside. That news comes out, and then boom, we fall right back down. All right?
How do we, where do we go to make sure the screen's not bouncing? My screen keeps moving.
Come up here to chart settings, auto fit chart, continuous auto fit. Make sure it's clicked to off.
Thank you.
You're welcome. So now we only got one contract left. So we got filled on two of them. And my last price target, remember, was right here. But like I said, why was I letting them run like that, right? Just like I was telling you guys, as you grow, you can let your contracts run to whatever price level you want, as long as you're confident that it's going to make it there. Okay? So I took these up here, right? Here's my buy-in price. And those two got sold live while we were here. The last one is still running for $43 profit. All right? So don't look at the $500 we're starting with or just trading one contract. Okay? Because like I said, it's going to grow exponentially. Okay? But you have to learn how to trade first, so I don't even want you guys trading that real money yet. All right? But even with one contract, the profit potential is unlimited. All right? Now, somebody was saying this morning, they were looking to, or they took trades overnight, okay, the margin requirements to go overnight are like 50-fold. I wouldn't recommend trading anything between 4 o'clock and 5 o'clock p.m. In fact, they'll limit your ability to trade between the 4 and 5 o'clock hour. All right, so if you're looking to swing trade in the future going forward, after you know how to become profitable in the futures market, wait until later on that evening. All right, the market closes every day between 5 and 6 o'clock. All right, so wait until after 6. Okay, and I would even say 6:30, because a lot of times, the second the market opens, let's just say it was closed, and then at 6 o'clock it opens, but boom, it just slammed down for no reason, right? So wait a few minutes, because a lot of times there's tons of orders in there, or they're, liquidating some positions or something like that. So if you're going to swing something overnight, wait for your maintenance margin requirements and all that, that time period from 4 to 6, settle down. So if you were going to swing something, look to get into it after 6:30 p.m., and then you should be fine until the next day. But again, make sure you're not looking to buy in an area where you know it's going to have a hard time going, right? If you're looking to swing in one direction, make sure you're in the right location. All right? All right, guys. I'm going to wrap it up. I will see you again tomorrow.